Coming live from Boston, Massachusetts, USA is our guest this evening. Welcome to this very special edition of the KJ Masterclass Live, the show which ensures that you profit from your time spent here with experts, either through their industry insights, information, or simply learning from them. And before I move forward, may I request you to subscribe, follow, like, and comment on whichever platform you're watching or listening to this show on. And today we have Peter Millington, founder of Scientific Financial Systems, and we'll be talking about a lot about if better data is helps you make better investment decisions. His company is all that you perhaps if you are into the trading, into stock market, financial markets, his company would perhaps be the one that you would be looking for to give you help you get the best financial decision. Welcome to the show, Peter. Welcome to India. And tell us about yourself. Tell us about your company, what you do, how you do.
Thank you, AJ. It's a pleasure to be here. Great opportunity to speak to you today. Thanks so much for the invitation. My company is Scientific Financial. We're based in Boston. We have a number of people on our staff that work in other cities in the U.S. Our product is a software tool that's developed for large investment companies to help them to manage their research and investment strategies using technology and the latest kind of trends and techniques in machine learning and data science.
Okay. And about yourself, Peter, you have had a great, lot of experience in this line, from Fidelity to all those places. Can you tell us about yourself a bit?
Thank you very much. So I grew up in Texas. My parents were from England, and I went to studied aerospace engineering in university and came to the Boston area because a graduate school at MIT here in Boston. Worked in the defense industry for a few years and then went into finance and worked at Fidelity Investments for 17 years. And then also ran a hedge fund here in Boston for about 5 years before I started this firm called Scientific Financial. I always had a dream of entrepreneurial kind of endeavors, and my father also kind of was an entrepreneur. So it's very exciting to actually be fulfilling those dreams and also kind of bringing a product to market that we believe is actually going to be very transformative to the investment industry.
Okay, so in talking of investment decisions, better data, use of data science, big data, machine learning into asset management, into trading, so is trading today about just data? Where is the common man in this whole system? Is he out because he does not have the capacity to buy? Can you bat for the common man from your point of view, please?
Very interesting. Yes. So the investment industry has evolved quite a bit, and it continues to evolve. There's just so much more information today than there used to be. And it happens, it comes out very rapidly and disseminates kind of broadly. So there's been a major trend in finance to adopt quantitative investing techniques out of necessity because there's just too much information to process just subjectively using just the human mind alone. So that's kind of the way things have been evolving, and firms have felt compelled to embrace these techniques to stay competitive and stay relevant. So with respect to where the individual falls into that, there's a need now for investors to adopt and embrace quantitative techniques and use data information processing in various forms to actually be able to perform and be competitive in the investment landscape.
Right. So from a common man's perspective, what is quantitative investing? Because see, I did a Google search. It talks about investment approach that uses advanced mathematical modeling, computer systems, and data analysis to calculate the optimum probability of executing a profitable trade. Does it mean the same from your point of view? What does it mean? Can you explain it in terms of a common man's understanding?
Yes. So there's a lot of different types of quantitative investing, and it can vary, from being purely something that is a translation of traditional approaches to something that where you let AI techniques kind of determine and find relationships, and so it runs a big spectrum of what it means and how it's defined. But at the end of the day, there's a lot of information out there that affects security prices, and sometimes they're causal and sometimes they're not. So there's a big problem in terms of actually figuring out what information is relevant, how to actually use that information, how to combine it with other information, and at the end of the day, make informed investment decisions. So ultimately, you have to bring some experience and judgment to bear as well. At the end of the day, the investors have to actually have an understanding of what's driving the markets, as well as how to craft an investment strategy, leverage the data science techniques, but at the same time, make sure that the positions that you're putting in your portfolio are justifiable, understandable, explainable to investors, and actually have sound investment judgment and methodologies behind them. So for example, you can still utilize in valuation techniques, you can still utilize good business principles in quantitative techniques, identifying, for example, which companies out there are being run well and which companies are being run poorly, which companies are embracing kind of, good management techniques. You can define all those quantitatively, bring them to bear and identify, and define these things, but also identify which ones are actually most profitable by looking at historical relationships, doing historical studies, and then building a system whereby you can actually leverage all of these influences in practice to provide kind of positions that are justifiable and explainable, but also still based on good investment principles.
Okay, Peter. So let me ask you this way: who are your clients? Who uses your data, your technology that you provide? Who does it? You talk about a technology called Quotient. It provides enterprise solutions for investment managers that provides a data-driven view of investment opportunities and strategies.
Right.
Who uses such?
Yeah. So you mentioned our investment product. We call it Quotient. I spent 20 plus years in the investment business in what we call the buy side, where managing money, investment portfolios for clients. At Fidelity Investments, a very large firm. There's a lot of other firms like that, but they actually still need to manage kind of a research process, manage databases, manage information processing. So our target audience for our products tend to be larger investment firms. They might be mutual fund companies, they might be investment banks, they might be large hedge funds, professionals that work in the business every day, but at the same time can still utilize some software and analysis tools to help them do their job more effectively and more efficiently. A lot of these firms have very large budgets and very large staff, but at the same time, they actually would like to perform their work more efficiently and make sure that they get the most out of their staff. So a lot of these firms hire very highly educated PhDs, a lot of times in physics and engineering, et cetera. And they actually are very savvy technologically, but at the same time, our product looks to help them do their work more effectively and more efficiently, so they can focus on the value-added aspect of actually being creative and bringing those technologies in a very kind of thoughtful way into their portfolio processes.
And the stock market, people who are associated with the stock market, obviously in their day-to-day trading.
That's
brokers,
correct. Yes.
They do it. Okay.
Yes, that's right. That's right.
Yeah. Yes.
So it tends to be larger firms, but at the same time, a lot of these techniques can be deployed, by individuals, particularly people that are actually, that have technical skills that can do some of these things on their own. There's a lot of opportunity to actually get creative.
Okay. So in a way, it helps you in algorithm-based decision making.
Yes, that's right.
That's right.
Yes.
Now, there is a certain degree of impression across the world, I can say. I've read it at different places. Even in India, there had been some controversy of late, and there is some case also going on in regards to that. That algorithms, specifically, if you just tinker with the system, then it can work to advantage of only some people.
Yes.
Even a fraction of second or some seconds can lead to taking a lot of people out of the equation and leading to advantage to a lot of people.
Yes.
Now, first is that, is it like cartelization? Is technology leading to cartelization? I'm not accusing it that one should not go for it. That is it that certain people are using such new technology like data science, artificial learning, and all this stuff, leading to an impression that there is cartelization and the common man out of the system. How do you see all these things from a point of view only as a pure creator of a system which is to enable such transactions?
Yeah, at the end of the day, algorithms are designed by people, right? So there's actually a designer and an author, right? And there's hopefully some justifiable kind of research and understanding of what's actually in that. With respect to how that plays out in terms of just in terms of firms and individuals and that sort of thing. It's very competitive. So at the same time, firms look for an advantage, right? The algorithms, they oftentimes can find advantages through rapid trading, and processing the information more quickly. As a whole, those sort of approaches do improve and progress the state of the art, which ultimately does make the markets more efficient and ultimately does benefit society. But at the same time, it is challenging for individuals to be able to embrace these techniques themselves, because they can be quite intensive in terms of just the initiatives and the cost involved as well. But at the end of the day, the algorithms are ultimately the next generation of just investment strategies, that have been around for many decades. But today they've just become more sophisticated, more rapid, and seek out a lot of different opportunities and inefficiencies. And at the end of the day, the inefficiencies will be exploited, but eventually they'll be arbitraged away, which actually makes the whole system perform more effectively and does benefit kind of the economics in general. So
Peter, you are the creator of such a technology. Your firm creates some such technology.
Yes.
Now, have you tried to build, within the system itself, that it is for the positive and not for the negative? See, firms and a lot of people, it's human nature, to take advantage of any loophole or any inconsistency in the system for their benefit. Right. Perhaps even I would do. Humans are infallible,
Yes.
fallible.
Right.
So as a technology person who has created such stuff, how do you look at it? Are there chances of building the same use of machine learning, artificial intelligence into the system to make the system better and positive?
Right. So I think it's always been the case that people look for opportunities in their investments, right? Identify situations where, the price of an asset is too low or too high, and there's a way to monetize that, right? So that's not a new kind of approach. These techniques are really just, like I said, it's the evolution of that whole process. In terms of fairness, I think, anybody can kind of bring these to bear. It is harder to do this at scale today, for an individual, but at the same time, this is the evolution of just the markets, embracing, the techniques that identify opportunities. And, again, this is also kind of happening across all the industries. It's not specific to finance. A lot of industries are embracing kind of data science, algorithms, kind of opportunities, that improve and progress their business, right? So the investment industry is not different in that regard. But I will say one of the distinctions in the financial world is that people are extremely secretive of what they're doing, right? They develop their techniques. They have kind of their own, trade secrets. And a lot of times they, guard them and don't always share them. So, there's a lot of innovation going on in finance, but a lot of that you actually don't hear about in the press because, when somebody identifies and discovers a technique that works, they want to keep it to themselves, and that's understandable to some degree. So you don't always know where the state of the art is in the financial industry. So,
okay. So why I'm talking so much about this particular aspect is the way I grew up. I used to see a lot of day traders. People used to trade during the day, make some profit out of all that system that in stock trading, and then they would be happy about it, and that was about it.
yes.
But now, with whole change of things happening, with so much of technology coming in, not that I'm batting for those day traders, but that those people are out of the system. The bigger question is that a lot of people used to invest, even in mutual funds. Forget about the stock market. They used to read for themselves which mutual fund is good for them, try to do their own understanding. But with hundreds of mutual funds existing today, even to find a good mutual fund, they will need to have a better understanding. With so much of data-driven decisions by the mutual fund themselves, do you think it will be easy for a person like me to understand what they are talking about? Forget about putting money into the stock markets where there are hundreds and hundreds of stocks.
Right. And so that's a great question. So I think there has been kind of a trend towards, democratization of information, the availability of information. There also has been an evolution of strategies such that, in the past, there were investment managers that had a certain thought process. And they would actually manage their portfolios with certain philosophies, and that's all good. Over time, those have been captured into definable kind of structured, systematic investment approaches, and they actually now are available in a lot of forms in ETFs or mutual funds that actually, formally embrace kind of these techniques and make them available to individual investors. So ultimately, all investors, even individual investors, now are starting to get the benefit of being able to invest in various ETFs or mutual funds that actually, make these algorithms available to the common, investor, which is good in general in the sense of giving people, that option to participate. But another aspect I was going to mention is that we actually leverage a computing language called Python, and Python has evolved over the last 10 or 15 years dramatically, and it's now become the de facto language to use for data science. And one of the great things about Python is that it's an open source language, which means that anybody can actually get their hands on these tools and start to deploy and apply some of these techniques themselves. So the fact that the technologies a lot of times are open source really does make, some of these techniques and these capabilities available to individuals.
Okay. I get your point. You have dealt with my questions, some of these questions which are not easy to answer for one particular company or as the founder of one particular company, because it's an idea which is there and it is going to happen. Data science and use of technology is obviously going to happen. Big data is going to be used, and obviously human nature is that every individual and companies will certainly try to use it to their advantage. The only question is that whether it's a fair playing field for everybody. But then, be that as it may, we will talk about the technology itself. Now, what is big data? How did it come into this investing part, that big data can be utilized, data kinds can be utilized, machine learning? What is machine learning doing in this? I thought machine learning, from a common man's perspective, machine learn a bit about how you do things and what you do, and then try to replicate it in your future day-to-day work. What is machine learning doing this? All these things.
So it's very exciting. Machine learning and artificial intelligence, they've been around for many, many decades, but, and there's been some start and stops, of that, application of those techniques over the years. But, I think the explosion in computational capability and cloud computing, have really made some of these techniques viable now, and you see them in a lot of other products. But it's always the case that the financial industry is on the cutting edge, because there's if you can be creative, in deploying these in investment strategies, people can actually end up generating great returns and generating a lot of money, for their investors. So there's always an interest in applying the latest techniques in the financial domain. And so ultimately, at the end of the day, these techniques are more efficient at processing information, and a lot of information, and identifying kind of patterns that may not be immediately obvious to to sort of human kind of thinking, because humans, and they do bring their own biases to the table. They have a certain way of thinking about things. They've been educated to think about problems a certain way, and computers can sometimes, and these techniques can sometimes discover patterns that may not be immediately obvious to an individual without the aid of having some of these techniques. That being said, one of the risks here is that if people are not careful, they can develop a system that they don't understand, and they can let it help them with their trading. But when things don't go well, it's kind of a risky place to be when if you don't fully understand how and what your algorithm is doing. So there's a balancing act there in terms of leveraging the power of these techniques, which can educate you and bring you to see certain opportunities and patterns that you might not have seen otherwise, but at the same time not leading you into a place where you don't have any understanding of what's what your system is doing. And that gets back to this kind of phrase that you sometimes hear called black box, and whether or not it's a black box and you do or do not understand what's happening inside the black box. So I believe that there's a need to have a good balance of judgment, letting these tools help you to explore, help you to learn, but at the same time not going blindly down a path where a technique or a machine learning technique or AI would actually would have you embrace a strategy that you don't fully understand, or can't be justified kind of from a fundamental kind of investment standpoint. So you have to, I think, balance that off. So at the end of the day, so that you have some care in terms of what you're doing, how you're doing it, and to balance off that risk, and to be able to have a comfort level and explainability as to what's happening inside your investment strategy.
Okay, so tell me, a situation like this, like say if there is a stock market big crash,
yes,
or a thing like 2008. So there were people whom one could put the onus on, that these are the ones who could be told about that you are to be blamed,
yes,
or the system. But suppose a thing like that happens today, when all the systems are going based on algorithms and data science and everything. Who does one blame? Is it the investment manager, or is it the stockbroker, the trader on the floor, or is it somebody higher up in the ladder,
right,
or is it the supercomputer, or whatever you can call it, the data
right,
science, or the PhDs that you have hired to decode all that thing? Who do you blame in that?
Yeah, no, it's a great question. I think at the end of the day, the authors of these algorithms, they have to understand kind of the implications of what they're doing. A lot of the work I've done has been more, broad security stock selection based, not, trading directionally the markets and, the high frequency, effects. But there are a lot of algorithms, trading algorithms out there that sometimes can introduce volatility in the marketplace, and a lot of times when there's big moves in the broad markets, in the indices, there can be a belief that the high frequency trading algorithms were involved in that. I think there may be some truth in that, but at the same time, these are algorithms that are implemented by individuals, right? So And I think there is a lot of care that goes into thinking about what can go wrong, because at the end of the day, these firms that deploy these techniques, they actually are making investments, their own capital on the line. So they do care about those sort of things. It's not kind of dissimilar to, robotics, where, if a robot does a certain actions, who's responsible? Ultimately it's the robot designer, right? Is the one that's ultimately kind of behind the decisions to make, implement the algorithm. So, but yes, there are things do happen much more rapidly today, and it is very hard, going back to what we talked about earlier, it's very hard for individuals to operate competitively on those very rapid time frames that now, happen. A lot of times trades and trade considerations are, micros, seconds and that sort of thing. But at the same time, it needn't be that way always. The work that I do is not high frequency necessarily. You can still bring, data science and artificial intelligence techniques to longer term investing, making, better investment decisions on a longer time frame. Not necessarily, doesn't have to be about, the high frequency trading algorithms, and so a lot of the work that we do at our firm is actually, creating better investment strategies that, have longer term investment timeframes, months, possibly even years, but actually, using those modern techniques to identify opportunities. So it needn't always be about, the trade, the high frequency trading effects that you sometimes do get a lot of headlines in the media.
Right. I understand. I hope the wise man in a company, in a firm,
Yes.
or the level-headed investment manager still finds his place amongst all these changes in technology that are happening. But tell us about the challenges that that are there in managing data in a quant investment model. What are the challenges that an investment manager or whoever is handling your platform or product?
Yeah, so I think it's a lot of times there's a lot of information. Like I said earlier, you have to balance off these techniques with sound investment principles, and ultimately, I think bringing your experience to the table, of actually spending time in the markets, understanding what drives the markets, understanding how you can use data to identify opportunities, but at the same time, having a good understanding of what it is that the algorithms are suggesting, that the opportunity is. I think those are challenges to, like I said, bring creativity to bear, bring experience to bear. Also recognize that there's opportunity in the new techniques, there's opportunity in new data, but using it kind of responsibly, but also using it artfully. And bringing some sound judgment to the table as well, so that you can kind of do all those things creatively and responsibly to get to a better place. But at the same time, you can do things blindly, and a lot of times those things do not work well in practice. So those are some of the challenges, I think, with respect to another challenge is, understanding the risks involved in your investment strategies as you're embracing new techniques. Sometimes the risks are not as well defined because you're doing things atypically, you're doing things in a new way. And so to some degree, some of the traditional approaches of understanding what the risks of your investment strategy might be sometimes are not as well defined as you'd like. So, balancing that off and actually trying to evolve your risk management techniques at the same time as evolving your investment opportunities, I think is a challenge as well. So I was going to also, sorry, go ahead. Yeah, I was also going to mention that one of the challenges is there's a lot of information out there. So you do have to hypothesize, you do have to, be creative, but you have to look at a lot of different information and look at it rapidly. At the end of the day, what the name of the game is here is to be more informed, to tie into more information sources, and to explore how to use those information sources, and to do that exploration, quickly, so that you can discover, opportunities in new information more quickly than your competitors, and then deploy that more quickly. Because over time, it is generally true that information that is opportunistic will end up getting discovered by more people, and eventually it becomes less opportunistic over time. So there's this continual kind of exercise of trying to stay ahead of the crowd, trying to be the first adopter of new information, to be the early adopter of new techniques, and to stay ahead of the competition, so that you can actually be the one that rides that that innovative kind of wave, because it will over time. The state of the art does need to progress, and you do need to stay ahead of the curve all the time.
So this technology is already being used. So how are these early adopters, you can say, these managers, they are overcoming these challenges?
Yeah. So as I said before, a lot of times people don't want to share their secrets, right? But people are bringing these to bear. There's a lot of new information sources that are out there, thanks to the internet, thanks to just the fact that companies are collecting a lot of information on their business and on their customers. And it's valuable information not only for their businesses, but for other businesses, and obviously for investors as well. So for example, if you have a utility company that maybe is just delivering electricity to their customers, right? They actually know in real time, if their customers are using more information or more energy, right, because of weather, or if there's a disruption. There's also some very interesting examples of investment companies using satellite image data, to look at, what's happening in, a factory, look at what's happening in, in shipping ports, to get, real-time information on, those business, considerations that are going to affect, the profitability of certain industries, and those numbers may not ultimately get kind of released to the public for many months, but the information is already starting to flow through. And if you can adopt kind of these new information sources that will give you those insights more quickly, then you're going to, actually be able to act on that and be more predictive of what's coming down, and what's going to affect stock prices. And you would actually get an early indication of that. So there's a lot of opportunities in terms of, embracing this new information, and looking at how you can kind of infer, these things. Obviously social media, people share a lot of information about their opinions of products, for example, and that actually, you can get a lot of that stuff, in real time, in terms of, is a product selling well? Is it not selling well? Is there supply chain issues? People saying, I can't buy this product because it's sold out at stores, and then you can actually say, well, that's going to be a problem for the company's not going to actually be able to sell as many, units as they expected, because, they're having supply and delivery issues. And, so investors find ways to get at this new information and embrace it and put it in their investment strategies, more quickly now. And it all happens very rapidly. And, it all comes back to investors actually being able to tie in and adopt and explore and act on these new information sources more quickly than their competitors.
Okay, Peter. Peter, is this platform or the technology that you provide, is it applicable to other industries also, out beyond the financial world?
Yes, so data science is becoming more common across all industries. As I said earlier, finance tends to be a leading adopter of new techniques. But I believe that there's been a major shift in business in general to adopting data science techniques, business intelligence, et cetera. There's just a lot more information that companies have on their own operations, and there's also they are investing in building staff and departments that can analyze that information to help them make better business decisions. So I do believe that data science in general is becoming a lot more pervasive across all industries, and arguably all industries need to embrace those techniques to operate more efficiently. And if they don't, then they will not actually be as competitive. And so I do believe that, over the last 10 or 15 years, there's been an explosion in terms of the adoption of these techniques, as well as companies investing to develop and have this capability in-house to let them run their business more efficiently.
So that means a lot of business for you, Peter.
Yeah, so we're focused at the moment on the financial industry, but yes, a lot of the things we're developing can be applied to broad industry and broad business. And I think that's very exciting. That's a great point.
Great, great. My last question to you, Peter, is to understand. Think of me as a layman. I don't understand this, but there is a huge talk of Web 3.0. Now, whatever you know about, you are an industry insider.
Yeah.
A lot of technologies, whole apparatus has been built over the years. The last Web 2.0, maybe around 2005, around that time it was launched, or whatever it was. But in the last 2 decades, whole apparatus has been built on the present system. A lot of your business or your products are also built on the present system, the way people download or upload or you utilize that information. What is Web 3.0? If it comes, and whenever it comes, then will whatever you have done so far, will it get nullified? Will it be easy to onboard on Web 3.0? What is that monster, or you can say a great good elephant? You can say. Can you tell us about that?
That's a great question. I would say that the Web 2.0 has really revolutionized society and investments. At the end of the day, I think there has been a challenge in terms of getting information, and it's great to have standardizations around those. How do you get information? What format does it come in? And cloud is actually being a big part of this progression. But I think going forward, with Web 3.0, there'll be, I think, even more information, but also kind of more standards. And I think that it's going to be easier to get access to more information, but at the same time, there's still a need of evolving and improving the techniques of what to do with that information. So what we try to do at our company is to help our customers to get their hands on the data and apply the techniques more quickly, right? And actually be more actionable on those sort of opportunities more quickly, and to get the companies out of the business of the data management, data accessing, and more into the business of analysis and creativity. And I think that, coming back to your question, I think Web 3.0 is just going to highlight that even more, because there's going to be more information. I know there's kind of a big evolution of the metaverse. And I think that that's going to play a role too. I think the investment industry will always embrace these latest techniques and look for ways to profit from them. So I'm sure that the financial community is going to be at the leading edge of finding ways to utilize Web 3.0 in new ways. But I do think at the end of the day, it's just going to be a more efficient way to get information and to collect information and to interact with other people. But, it will just highlight the need for, a way to actually to leverage and find opportunity in that information. And that is going to, I do think the financial industry is going to continue to be a leader there.
Great. And for me, you are a big leader in your own space. And I'm sure a lot of people who are hearing you, seeing you, will certainly want to talk to you, understand your product better for them to utilize. How do they contact you?
Oh, yes. So our website is siphonsys.com. It's SCIFINSYS.com. There's a lot of information on our website. They can also reach out to me, Pete at siphonsys.com, and we have info@siphonsys.com. We also have a lot of information on our website as to what our product does and how it works. We're very excited about what we're doing here. We believe that the financial industry is going to continue to evolve and embrace these new techniques, and we want to be a part of helping move the state-of-the-art forward and help firms kind of apply these new techniques. So people can go to our website, they can reach out to us. There's a lot of information, and like I said earlier, There's a lot of ways that individuals can apply these techniques, themselves, and or to get involved in applying these techniques in the industry. It's becoming a dominant force in the industry. There's a lot of opportunities for employment in the financial industry to apply data science techniques. And as I said earlier, people make their way into finance from a lot of different educational backgrounds, and it's a very interesting area to work and to pursue a career. I actually personally found it very satisfying. There's a lot of very bright people with a lot of diverse backgrounds, and so I would recommend that people also consider looking into that as a career.
Great. In fact, I'll also put a lot of your information, your site information, your information onto the YouTube description so that people find it easy to connect with you. So that's a lot of information, a lot of understanding from you, Peter. And this is not the last time. We will continue to get to you again and again, because you can answer a lot of questions that we will be having going forward, not only on Web 3.0, but also on this data science and machine learning. As machines continue to learn, we will also continue to learn about them. So with this, it's a wrap on this edition of the KAJ Masterclass. Thank you so much for your time, Peter.
Thank you, AJ. It was a pleasure to speak with you today. Thanks again for the invitation. Have a great day.